The latest commodity to spike rather remarkably is rice, although it's sometimes difficult to get a handle on exactly what's happening. Last week, Typhoon Meggy swept through the southern Philippines, and here's two conflicting reports on damage to the rice crop. First, the Straits Times, 500,000 tonnes of rice destroyed. Sounds terrible, doesn't it? But then there's this from the Manila Bulletin. Minor damage only, and it was the same typhoon. But apparently not so terrible. The significance of that typhoon is that the Philippines is the world's largest importer of rice, so when they lose a decent whack of their own crop, the price repercussions are automatic. Here's a graph of how rice prices have moved in the past 5 years. You can see that dramatic spike a couple of years back driven by speculators. The price came back with a crash. But since June of this year, the rice price has lifted nearly 60%. It's now just above $500 a tonne, and that's been driven by the fundamental equation of supply and demand. So where does this leave the attempt by the Italian company Ebro to take over Australia's Sunwhite rice? It may not now be as clear as previously appeared. Let's stay in Chicago for the rest of the hard commodities, and the bulls were everywhere. Wheat went up on the back of growing concerns about world stocks. Corn retained its strength from past weeks, and the soybean world battles to find a price and an export level which will stop China. That's close to a 12-month high for soybeans. Wheat rallied 5 days in a row while the weakening dollar is helping corn exports. New York's Board of Trade saw some profit-taking in cotton, with market chatter that these record prices are biting into cotton demand. Mind you, the experts have said that before. Cotton lifted yet again last week to close well over $1.20 a pound. Local wheat futures watched the Chicago lift and reacted accordingly, but the biggest influence here remains the weather, drought in the west and too much rain in the east. As we heard in the news summary, some parts of WA are having their driest season since 1914, while more rain is forecast for wide areas of New South Wales and Victoria, and downgrades look inevitable. And spot markets also lifted. That wheat price is up nearly $70 since June. Canola is up $100 or close to 25%, and sorghum has lifted $36 since the start of June. Dairy prices are okay without being flash. Europe is competing in the S&P market, but the strengthening Aussie dollar is weakening returns for Aussie farmers. Butter has the strength at the moment. Tight world supplies have put a floor here. The general outlook remains positive. Both prices are US dollars per tonne. To livestock now, and the rain is making life tough for lot feeders. After all, why would you pay to feed cattle when there's so much grass in the paddocks? And the dollar continues to make exports hard to find. Cows lifted on the back of reduced numbers, but that lift would barely equal a slip over the past few weeks in this category. Other categories were steady to firm. Sheep numbers available have been shaped by weather conditions. Supplies were strong because of drought in the west, while rain in the east allowed producers to hang on to stock. But last week, Victorian numbers were actually up, and this put pressure on the indicator. Mutton lifted to pick up some recent losses. And the pig market is firming nicely as we move into the think of Christmas zone. Both pork and bacon demand is strong as processors look for more stock. Now to wool, where the market had its best week in ages. The fine wools in Newcastle were in demand, especially from Italy. Top price was 8,500 cents for a bale measuring 12.1 microns. Pass-in rates were also very low as the Eastern market indicator lifted close to 3% as it closed on 949 cents a kilo. Now, a couple of notable events to close this report. Last week, the prestigious NAB Agribusiness Prizes were decided, and the top award for Leader of the Year went to Alan Winnie. Alan wears a dozen or more corporate hats, including Chairman of Queensland Sugar. Well done to Alan, and well done too to one of the most influential figures in recent times in the Australian beef business. Ian McIver has been part of the industry for more than 60 years. Ian's decided to retire, and last week there was a gathering of industry heavyweights in Sydney to say farewell and pay tribute.
And I can only say that he's been a person who's seen the industry and been a huge part of driving it from a fledgling state to the very, very sophisticated industry that it is now, exporting, $1 billion worth of livestock out of this particular country.
That's MLA boss Don Heatley speaking about Ian McIver, who's called it quits at the age of 79. And that's the Landline Commodities Report.